In this video, we'll break down some of the most essential financial terms that every professional, whether in leadership, marketing, operations, or entrepreneurship, needs to understand. Let's begin with three closely related concepts: revenue, cost, and profit. Revenue is the total amount of money a business earns from selling its goods or services. Think of it as the inflow, the money that comes into the business before anything else is paid. Imagine you're running a small coffee stand. If you sell 10 cups of coffee in one day, and each cup sells for $10, your total revenue is 10 times 10, which is $100. Now let's talk about cost. This refers to the money you spend to produce or deliver your product or service. For your coffee stand, this might include the cost of coffee beans, milk, cups, sugar, and maybe even wages if you're paying a helper. Suppose it costs you $4 per cup to make each coffee. That includes all the ingredients and other direct costs. For 10 cups, your total cost is $40. Finally, we have profit. This is what's left after you subtract your costs from your revenue. In this example, if your revenue is $100 and your costs are $40, your profit is $60. The formula is simple to remember. Profit equals revenue minus cost. Profit is what every business ultimately strives for. It's the money that stays in the business, the reward for all the work, effort, and investment. Now, let's move to another critical set of financial terms. Now that we've covered how a business earns and spends money, let's explore what it owns and owes, in other words, its assets, liabilities, and equity. Let's start with assets. An asset is anything the business owns that has value. This can include cash, equipment, buildings, vehicles, inventory, or even accounts receivable, which means money customers owe you. For instance, your coffee stand might have a coffee machine worth $500, some inventory like coffee beans and milk worth $100, and $200 cash in the till. These are all assets, resources you control that help your business operate. Now on to liabilities. A liability is something your business owes. These are your financial obligations, money you borrowed or bills you need to pay. Let's say you took out a small loan of $300 to buy your coffee machine. That loan is a liability because you're required to repay it. If you also owe your supplier $50 for last week's coffee beans, that's another liability. So where does equity come in? Equity represents the value that belongs to you, the owner, after all liabilities are paid off. It's what's left when you subtract what you owe from what you own. The key equation is assets minus liabilities equals to equity. So, if your total assets are $800 and your total liabilities are $350, your equity is $450. That's the part of the business that you truly own. Understanding this balance is critical. It's the foundation of your company's financial health. Whether you're running a side hustle, managing a growing company, or preparing for business school, understanding these 6 terms, revenue, cost, profit, assets, liabilities, and equity, gives you a solid base. They are the financial vocabulary of business. And mastering them, that's your first step toward becoming financially fluent and strategically sharp. Enjoyed what you saw? Hit that subscribe button and like this video to join our community and never miss out on new content.